We're going to have a nice session from our blockchain working group, blockchain and digital assets working group regarding EU blockchain regulations and business evolution. I'm welcoming on stage Panagiotis Ziampras, Anastasia Mallerou, and we will have remotely Mehmet, Kerse, and Somdip Dey.
So everyone's got a coffee. We need your full attention here. We have a lot of regulations to go through. This session is hosted by the Blockchain and Digital Assets Working Group. I've been telling a lot of people this is the fun side of HAT. And I've been in two minds about the message that I would try to convey across the day. So I'm not sure if you use to other sessions around blockchain, but people tend to dress a little bit more techy, like sneakers, T-shirts. I'm very formal. So the message for today is like blockchain and crypto is becoming a little bit more institutional, judging by my formal appearance. So we'll do a quick round of introductions, and then we'll jump into the discussions. The topic, as we said, is EU regulations on blockchain and crypto and business evolution. Very excited to introduce to the audience, sitting next to me, Anastasia Mallerou. Anastasia is a legal expert in payment systems and services, and currently a lecturer in the University of Piraeus and the European Law and Governance School. She was the former Chief Legal Counsel and a member of the Board Director of LIAS, and she has also participated in the legal support group advising on the introduction of SEPA, and she was an associate in establishing the regulatory framework for payment systems of the Hellenic Bank Association. Joining me from Germany, Mehmet Kerse. He's a consultant in digital innovation and financial inclusion. He has worked with many companies, including the World Bank and United Nations, on matters related to regulation and supervision of digital financial services. He's also a senior expert at the Digital Euro Association, which is an independent think tank focusing on CBDCs, stablecoins, and other forms of digital money. And last but not least, Somdip Dey, joining us from the UK. Somdip, hi Somdip. He's a research scientist, but also an entrepreneur. He's currently a professor at the University of Essex, and a member of the several technical program committees, including the Forbes Technology Council. He has co-founded two companies, which both of them use blockchain, AI, and machine learning as underlying technologies to serve their clients. And for his achievements, he has also been recognized as a Life Fellow by the Royal Society of Arts and an MIT Innovator under 35. Right, so welcome, everyone. Before we deep dive into the underlying elements of the EU regulations, I'd like to kick off the discussion with Somdip. Somdip, from your experience and your engagement with blockchain and crypto, could you please explain to us how the current business landscape has been formed in what has been until recently a loosely regulated environment?
Thank you so much for the warm introduction, Panagiotis. So back in 2008, with the introduction of the white paper of Bitcoin, we didn't just notice the introduction of cryptocurrencies in the world, but the underlying technology, the blockchain itself, which is one of the revolutionary technologies of the 21st century. Now, as blockchain and cryptocurrencies become more popular over the decade, we also noticed that the regulatory policies around the world from different agencies, institutes, governments, as well as task force are being more enforced. Now, regulatory policies related to cryptocurrencies and digital assets vary from region to region around the world. We will shortly learn more about the different regulatory policies, especially MiCA in Europe. We even have SEC and Commodity Future Trading and Commission in the US. They have their own set of regulations related to cryptocurrencies. On the other hand, we have the Bank of England, which has their own policies. And China has completely taken a different stance on cryptocurrencies altogether. So from all these regulatory policies, what we can notice that the regulatory policies mostly affect the businesses. Now, the four key areas where these policies affect in a business are mainly, number one, compliance costs, number two, legal risks, number three, business operations, and number four, market access. Now, to give an example from my own company, so Nosh Technologies, which is a multinational early stage startup where we are using AI and blockchain to systematically fight food waste within the agri supply chain. Now, and we have been also at Nosh Technologies one of the pioneers in developing blockchain and QR code based framework that reduces the food waste within the supply chain. And like this technology has been now being used and referred to by policies by the United Nations, US Food Department, as well as UK Food Departments as well. Though I talk about the blockchain, so what happens because we are trying to utilize blockchain to fight food waste. So back in 2021, we even created our own utility token called the Nosh token, which can be used by consumer to buy food or to even trade food as well. So we haven't just implemented blockchain, but also we have created our own utility token that could be used. However, because we are multinational, so as I mentioned earlier, that the legal risk and the business operation affects any decision on whether we should go for ICO for the like token or not. So although we have created the token, and it's if you go to Etherscan, you can view our token as well. You can also view the smart contract related to it, but we have not made our token public because what we realized that it has a lot of cost due to different regulatory policies on different regions. And because as a multinational company, we do operate in different regions, it was not just feasible for us to just go for the ICO yet. But again, we are still exactly. So we are still working on that, but hopefully, as regulations became more uniformed over the regions in the next couple of years, hopefully, we then will go for the ICO.
I see, I see. Now, as most of you are aware, earlier this year, the EU led the way with the introduction of a comprehensive regulatory framework, which was called MiCA for short, or Markets in Crypto Assets Regulation, that was characterized as a milestone for the industry. So, Anastasia, how is the EU shaping the future with its strategy on blockchain, and what are the underlying elements?
Okay. Starting in 2018, the EU adopted the blockchain strategy with focusing on two main areas, legal and regulatory, to tackle fragmentation, and technical, basically standardization to facilitate interoperability. 2 years later, 2020, the digital finance package was launched. This has many components, 3 of which are directly related to blockchain. This is one strategy, the digital finance strategy. The target here is to facilitate digital innovation. And 2 legislative proposals that have led to regulations by now. One is MiCA, the Market in Crypto Assets Regulation, which was adopted some 3 months ago. And the other one is the DLT pilot regime for financial market infrastructures. Now, the DLT pilot regime is, of course, a flexible regime that gives space for experimentation. It is a pilot, so it will be revised after 2026. MiCA is the first comprehensive regulatory framework for crypto assets worldwide, and it is, for this reason, it's expected to lead the way for many other jurisdictions. Behind all these lay basic aspirations, which are promotion of digital innovation, of course, while mitigating risk, a level playing field, ensuring a level playing field for all market participants, protection of investors and customers, and of course, safeguard the financial stability. The ultimate purpose to enhance the level of competition of the EU financial sector.
Which is something that I assume the EU is very serious about.
It is very serious about, and this is why we see all these initiatives. I just named a few. There are much more going on.
Well, obviously, so before MiCA, there were a lot of ambiguities, a lot of gaps, because I think the other regulation that effectively applies was MiFID, right? And MiFID applied when a crypto asset was considered financial instrument. So now we have MiCA that goes in basically and sort of tries to plug these gaps. What is the differentiation between crypto assets and services in that context?
Okay, under MiCA, MiCA defines crypto assets very broadly. Every digital representation of value or of rights which is stored on blockchain or transferred via blockchain is considered to be a crypto asset. Not all of these crypto assets, however, fall within scope of MiCA. Those that do are utility tokens used only in relation with the issuer. And then the asset reference tokens, which are supposed to hold a quite stable value in relation to an asset, be it fiat money, be it a commodity. And in the end, e-money tokens which are related with the value of one currency. Now, if these, for an issuer who issues these crypto assets, MiCA will apply. MiCA will also apply for service providers in relation to these crypto assets. The regulation has a quite long list of services that are covered, starting from custody and going up to operating the trading platforms or the exchange platforms and so on. So we need some scrutiny every time to see whether one particular service or one particular crypto asset fall within scope of MiCA. What does not fall within the scope of MiCA are CBDCs, central bank digital currencies, NFTs, and of course, coming to what you said, all financial instruments that qualify as such under MiFID.
I see, and that also gives me a very nice pass for the next question, which is, obviously I just mentioned about MiFID and the gaps that existed before the introduction of MiCA. Are there still any legal gaps at the moment that could become problematic in the future?
Well, there are. MiCA is comprehensive, not exhaustive, as we have said before. The DLT covers some financial instruments under MiCA and under some restrictions related with value. Still, it is not very easy always to identify where the line is.
Okay.
With technology running as it does, and regulator, of course, usually following, we have to check every time the characteristics, the features of each one product to be able to say where and if we should apply one of these regulations. Now, on the other hand, let's take the list of services that I mentioned before. We have one in MiCA. We have another list of services in the AML directive. And these two lists do not coincide. So there again, we need to be very attentive to figure out. So there are things, and of course, let's not forget that there are other things like other areas in which blockchain is implemented. So, and this may come up. For example, you may find tokens in NFTs, etc. What happens there? These are not yet regulated. Regulation is mostly focusing on financial services, and we all can understand why, but there is an area which is still unregulated.
Yeah, I mean, obviously, financial markets get most of the attention because this is where the risk lies, right?
Exactly. But there are more things that are not yet regulated. National legislators do come in and regulate some of these issues, so we're probably heading to fragmentation.
Which is, like, it exists by nature in Europe.
It does. It does. It's a basic problem. This is why the Commission takes all these initiatives.
I see. And now I just want to quickly shift my attention back to Somdip. Obviously, we just spoke about the regulations. How are businesses currently managing the changes brought by specifically MiCA?
Absolutely. So as we have already established, right, that regulatory policies affect the way businesses operate. For example, businesses may need to restrict the type of cryptocurrency transaction that they allow, or they may also need to implement additional security measures to protect the customer's funds. Now, one example I would like to talk about here, so most of us should be aware of Binance. Like it's one of the crypto exchange platform, which is very popular and one of the like popular platform where by volume. So taking the example of Binance, so in the UK, right, I've mentioned earlier that Bank of England has its own set of regulatory policy. And because of that, the UK Financial Conduct Authority has imposed certain restrictions on crypto transaction, especially related to staking, which prevents, like currently Binance, to provide staking offering to its customer. So if people in the UK are using the Binance app, they cannot stake anymore. But customers in Italy who are using Binance, they can still use the staking feature within the app itself. So this is one example where it shows that one company where they're providing their product and services to customers from different regions, sometimes those offering will vary. And again, like with MiCA, which is still like is not have not been adopted by different regions yet. So because of that, like companies or exchanges like Binance, they are still like implementing or modifying their services differently.
I see. And obviously, with these differences, I think education becomes a lot more important, right? So from the private sector point of view, how can companies enhance education and potentially mitigate any security concerns? Because I think both of them are intertwined.
Exactly. So again, sometimes we often forget that any institution, may that be financial or non-financial institution, the products or services that we develop as a company, it's targeted towards the consumer or customer. Now, blockchain, although it's not new, but it's also not old. It's still a growing new technology, newish technology, and majority of our consumer or customer, if we notice that when it comes to digital literacy, it's not that high relatively among the masses. So let alone when it comes to blockchain literacy, or to extend to cryptocurrencies, that's not high. Especially, let's say if somebody wants to like transact with cryptocurrencies, they need a wallet. But in order to have a wallet, they like it's not like setting up an email account where people can just start an account by having their own password. And if they forget the password, they can just reset the password to get a new password, right? But with wallets, especially transacting with cryptocurrencies, it's not like that. When you create a wallet, you're given the seed phrase, or in the back, it basically it's like the private key. So if you forget your private key or the seed phrase, you basically will never get access to that wallet again. But it's also important because of this, like how blockchain actually operates, especially while using wallet. It's very important for every businesses that are offering products and services in the blockchain or cryptocurrency domain. They need to have educational program or need to have fund for their educational program so that they can educate their customers on how to use their products and services properly.
I see.
Because
So,
over the years, I've heard so many cases where people have lost access to their wallets And those wallets has had Bitcoin or Ethereum, which now they would have been millionaires.
And I'm pretty sure no one wants
But
to lose
they
their
don't
access
have
to their wallet, right?
access to those wallets. Exactly. So any institution who are providing, just to reiterate, any institution who are providing services, products or services related to blockchain or cryptocurrencies or digital assets, they should definitely focus on educational program to educate the masses or their specific customers.
I see, I see. So I'm going to change it up a bit, and it's time to invite Mehmet into the conversation. So back in 2019, we saw the central banks experience a hard awakening. I'm sure you all remember the announcement of Libra by Facebook. And that drove the central banks a bit crazy. They suddenly realized, oh, there's an actual risk when it comes to stable coins. And fast forward to June 2023, the European Commission unveiled the much-awaited legislative proposal of the digital euro. Mehmet, you were recently a contributor to a paper that analyzed the digital euro proposal. So again, starting from the basics, what are CBDCs, so central bank digital currencies? How are they different from stable coins, and what are the features of the digital euro?
Thanks, Panagiotis. Hi, everyone. First of all, thanks a lot for the invitation, and it's great to be part of the conference. So, and I'm so sad for not being there physically, actually.
We've reserved you a seat, though.
Hopefully, in the next year's event, I would love to come and be there. So, let me go back to Panagiotis' question. So, yes, a CBDC, central bank digital currency, is a digital currency issued by a central bank in the country's currency. So basically, it's the liability on the balance sheet of the central bank. And today, globally, there are around 130 countries that are exploring a CBDC. And so there are two types of CBDC, we can say, wholesale and retail CBDC. So wholesale CBDC will be limited to users such as financial service providers, financial institutions, and banks. But retail CBDC is the one that is issued to the public, and that will be used by individuals, that will be used by businesses, companies, etc. So we can say that it's a new way to store value and make payments. And as mentioned, CBDC is different from cryptocurrencies, including stable coins. And stable coins are issued by the private sector. There are different types of stable coins, but in many cases, stable coins are pegged to a fiat currency, for example, dollar or euro. Also, stable coins might be backed by reserves or by liquid assets. So one popular example is, as you know, Tether. So Tether's value is pegged to the US dollar, and the issued Tether coins are fully backed by assets. Digital euro that has been discussed recently a lot is a retail CBDC. So it will be used by individuals, companies, by the public. So a regular person living in Germany, I will be able to use digital euro to make payments, to transfer money to my mom, etc. And EU has now, as Panagiotis said, has a draft regulatory proposal. So it's actually, this is the last day of the consultation. And according to this proposal, digital euro may be issued by the European Central Bank or by the central banks of the member states whose currency is the euro as part of the euro system.
I see. And obviously, I briefly mentioned earlier about central banks and acknowledging effectively the risk of stable coins that they pose to monetary stability and monetary policy in general. What were the ECB's motivation for issuing the digital euro?
So actually, when I look at the country reports on CBDC, especially retail CBDC, I see that different countries have different objectives in pursuing CBDC, from enhancing payment system efficiency to enhancing cross-border payments. Also, there's another motivation about increasing competition, etc. When it comes to the ECB's, European Central Bank's motivation in considering the digital euro, so for example, the European Central Bank wants to present a public money option to the people. So if cash in the market is, I don't know, less used at some point, so in this case, digital euro will be a public money alternative. And other motivation of the European Central Bank is to support a more competitive, efficient European retail payments market. So this is one of the explicit motivations. So the ECB thinks that this way the digital euro will enhance the resilience of the European payments market. Also, in the recent papers, the ECB explicitly states that the digital private sector solutions in the European Union tend to be dominated by a small number of providers. For example, strong non-European big techs. So, and with digital euro, the European Central Bank wants to balance this dominance by these big private providers. So basically, it wants to make the market more competitive. So,
I see.
And yeah, and also the last thing maybe I can say, reducing the adoption of crypto assets is another motivation from the beginning.
Yeah.
By the way,
I think it's becoming more obvious. So I'll throw some data, which is not really a lot, but it's quite interesting. So in 2022, on-chain stablecoin transactions amounted to $11 trillion US, right? Which is more than what PayPal processes in annual volumes, and similar to Visa's annual volumes. And it's sort of like, it's no wonder that both of these companies, PayPal and Visa, announced that they're coming out with their own stablecoin to settle with their clients, which raises the question how a digital euro could impact the current payments ecosystem.
Thanks for the question. Yes, digital euro somehow will impact the financial sector, PSP. When I say PSPs, payment service providers, banks, as expected. And so all banks and PSPs, payment service providers, will be able to provide digital euro payment services to consumers. And they may distribute digital euro, but this is not a requirement. So if a bank intends not to distribute digital euro, this is fine. This bank will not be forced, by the way. So this is an important point, which is part of the regulatory proposal. But there's one detail there. A bank will need to open a digital euro account as per the request of its existing client. So if your own client wants to open a digital euro account, you cannot decline, you cannot reject as a bank. You need to open this digital euro account. So this is important for the banks and financial institutions. And also, which, I mean, it's important to say that for the market, but the regulatory proposal states that there will be some sort of limits for the use of digital euro. Basically, this is to safeguard, protect the financial stability. Okay, it's understandable. And somehow the proposal refers to holding limits for digital euro users. So a limit of around 3,000 euro per 3,000 euro is now being discussed, considered per individual users.
As a ceiling, I guess.
Yes, it's the ceiling. It's the upper limit. So 3,000 euro. This is not regulatory. This is not part of the regulatory proposal. It's being discussed right now. But so it's it's not clear whether there will be a transaction limit for the digital euro user at this point. Anyway, so somehow the users will be able to hold digital euro, as you said, exceeding the, so there's a threshold and they cannot hold digital euro exceeding the holding limit. So, but on the other hand, customers will be able to use, to open a digital euro account in 3 different payment service providers or banks. But there will be a one global limit that apply to all my digital euro holdings, all digital euro holdings of one user. So during the digital euro account opening, the relevant bank or payment service provider will need to check whether the new customer, the new prospective customer exceed the limit or not. So this is impacting the market, the provider, because somehow the PSP, the bank, will have to verify this information before opening a digital euro account, which has operational cost, by the way. So we'll see how it works. But I mean, the ECB is now planning to provide some kind of an online platform. I don't know what it's called, but I mean, it's not certain yet. The ECB is planning to provide a platform managed by the ECB or managed by another authority. So through this platform, maybe financial institutions might be able to verify the information of the digital euro users, check the limits, etc. So this is one of the
a lot of elements that still need to be covered, essentially.
Yeah, it's not really clear at this point.
And just, no, sorry, finish.
Sorry, I mean, if I'm exceeding my time, so please feel free to interrupt.
I'm just being conscious of time. I think they've already cut us 5 minutes for some reason, but I'm going to ignore this. But you can finish quickly.
Okay, well, one final thing then that will be impacting the market, and it's important for the providers, for the financial institutions. So basically, financial institutions will not be able to charge any fees to individuals for providing the basic digital euro payment services. And the proposal, the regulatory proposal, has a list of basic digital euro payment services. So, for example, opening a digital euro account or closing a digital euro account or checking on balances transactions need to be free. Also, cash in and cash out transactions to the digital euro account will be free. But on the other hand, the payment service providers and banks will have some costs while conducting these services, right? So, and one question here, I think, is how the cost of financial institutions, banks, will be compensated in this case. So yeah, asking this because these basic services need to be offered without any fees. I'm just raising this question. So
no, I'm pretty sure the ECB will try to answer that very soon.
Let me stop here. Thank you.
Yeah. So I'd like to give the opportunity to our panelists now to talk about a topic of their choice. Anastasia, would you like to go first?
Thank you. I know we have very limited time, so I'll just refer very, very fast to the backbone of blockchain, which is, of course, decentralization. And this is what gives blockchain trust, security, transparency, and all these beautiful elements that make states, even states that ban cryptos, to embrace blockchain. And this is why blockchain is used everywhere in all activities, be it industrial, commercial, financial, you name it. On the other hand, what is the benefit of blockchain poses some challenges, and there we need to be a bit attentive when we are to make decisions. I referred to this a little bit earlier. In a decentralized world where all nodes are located all over the globe, for example, how do you enforce contracts, agreements? How do you resolve disputes? What happens in case of conflict of law? which national authorities, if any, are competent on blockchain issues, and so on. There are many, many questions, as I said before, what happens, for example, to DAOs, decentralized autonomous organizations that are based on blockchain. Are these covered by company law or not? There are many questions to which we don't yet have the answer. Not yet. I guess that as time goes by, we'll get more answers, either by legislators or by the judicial. I just want to mention this to make sure that we all understand benefits, and I wouldn't say drawbacks, but I would say challenges. So this is the new world of blockchain, and we'll have a lot to see in the coming years.
And I think everyone's very interested in this. Somdip, would you like to go next?
Thank you. So I would like to mention 2 points. So in the beginning, I started the discussion by saying that regulatory policies, they affect businesses the most. But to be fair, I also need to thank regulatory policies for being able to reduce scams and malicious activities over the years, which we cannot deny. So just to give you quick statistics, in 2018, we saw the most number of ICOs happen in the world. It was like more than 1,700 ICOs that happened worldwide, out of which around 656 of them happened in Europe itself. But since then, the number of ICOs has been dropping as more and more regulatory policies have been enforced in different regions around the world. Last year, 2022, we saw 13 ICOs happen worldwide, out of which like 5 were in the US and 4 were in the Europe. Now, it's not that regulatory policies, because of regulatory policies or other factors, that we didn't see more and more blockchain or cryptocurrency startups doing ICO. It's because before we had the regulatory policies being enforced, a lot of projects will just scam consumers out of money by doing ICO. But I'm glad that these regulatory policies did enforce and try to reduce scam over the years. But now talking about scam and malicious activity, I would like to come to my second point. So I personally believe that AI is, especially machine learning from AI, is the savior of the blockchain and cryptocurrencies malicious or scam issues. Machine learning itself is excellent in understanding patterns from the data. And in essence, blockchain is basically a digital ledger. So it has all the data in it. So we can actually use AI in conjunction with blockchain to understand when and where some form of fraudulent or malicious activity might be happening, and trying to stop it before it even happens. Now, we have the Financial Act Task Force, which is an international organization that sets these standards for combating money laundering and terrorist financing. We have a couple of other platforms or startups that have been developing their platform to investigate and stop fraudulent activities after it has already happened. But using AI, especially machine learning, we can still predict patterns of fraudulent activities and scams, and we can actually stop it even before it happens. So I would urge, but that said, that there are not many startups in this space where they are utilizing AI to make this happen in the blockchain and cryptocurrency world. Okay. So given this conference, I would highly urge that if you are a government agency or if you are a financial institute, do allocate some fund to encourage startups like this because at the end, the product that comes out of them is only going to benefit you. So
Okay.
that's 2 cents from my side.
Great, thank you, Somdip.
Thank you.
And Mehmet, just being conscious of time, please feel free to choose a topic of your liking. I think you mentioned lastly was the example of Brazil.
Yes, about the CBDC. So, as I said, I said many countries are exploring and researching retail CBDC and how to design it. It's like FOMO right now. It's fear of missing out, to be frank. That's why they are looking at how to design retail CBDC. But in parallel, what to Natasha said, some other countries, instead of focusing retail CBDC, they are exploring how they can benefit from the infrastructure, the technology, and how can they benefit from DLT. So yes, as you said, one example is Brazil. And Central Bank of Brazil is planning to create a platform for financial services based on a DLT system. So basically, the central bank is planning to leverage digital representation of assets, tokenization and programmability. Brazil is now piloting tokenized deposits, and the bank is testing how tokenized deposits in banks and payment institutions can be transferred between parties, transferred between the customers. So in the first stage, Brazil is looking at how the tokenization technology can be used for deposits and, government securities, etc. So at this point, we don't have a lot of details yet, but we'll see how this will shape up. But I believe this will also be followed by many other central bankers around the globe, tokenization and tokenized deposits. Let me stop here.
Do we have time for Slido, or? There are no questions? Oh, okay. So one question, I guess. Right, so I will cherry pick. So everything's about CBDCs, okay. Okay, so I'll pick the disadvantages of CBDCs. Any volunteers and who wants to answer the question?
I guess Mehmet.
Yeah, sure.
No, I guess Mehmet would be the, since he
Mehmet,
has
would you like to go?
Any disadvantages about CBDC? I think one thing I can say is there is a risk of crowding out some digital private solutions in the market. So that's why it's important how to design the CBDC. And that's why it's important from the beginning, from the early stages of designing CBDC, to collaborate, to have some collaboration between the financial sector, financial service providers, and the central bank. So otherwise, for years we are trying to, in financial markets, we are trying to increase the competition in the markets, and suddenly there is a CBDC which could crowd out the financial institutions. There's one of the important risks, I guess.
Okay. Anyone would like to add anything further? No? Okay.
Is it fine if I quickly add something?
Yeah, very quickly. I think we have 1 minute or so.
Yeah. Okay. So when it comes to CBDC, another disadvantage that I would like to point out, it's mostly related to interoperability. So let's say if somebody, like a customer, is trying to transact with CBDC between different currency as well, like from region. So currently, we still have to, given the current state of blockchain, as the speed of the interoperability increases, oftentimes we still sacrifice the, let's say, volume of transaction and the security. But I'm hopeful that although we still have this disadvantage now, but in the next couple of years, we will see new innovations happen within the CBDC itself, which can improve the interoperability moving forward.
Great. So that concludes our session. I would like to thank our panelists and everyone in the audience. I hope you had a great time listening to our discussion. Thank you.
Thank you, Panagiotis.